Good morning, everyone, and welcome to the webinar. Apologies for the slight delay, but David was just sorting out the recording. And yes, just to answer your question, we are recording it, and I'll send out a link with the recording. So, wow, someone from California. How lovely! Thank you, Dennis, for joining us this morning. And I think we've got some sunshine down here in Hampshire. So. Usually we're sort of moaning about how cold it is and snowing and raining. So there we are. And as you probably guessed, here in the UK, we do talk a lot about the weather. So wherever you are in the world, from whichever part of the world you're joining us, you are more than welcome. And as I'm speaking, I'm literally just waiting for David, my husband and trading partner in crime, to join me. But while he settles himself down, can I just draw your attention to the disclaimer? I know we do this every time, and it really is getting more and more difficult in this market. The regulators are really clamping down on leverage. In some parts of the world, we've heard of traders who can't even get accounts unless they show they have huge amounts of money in reserve. And I think it's partly our fault. It's partly, people are so desperate to become traders, they kind of, forget the risks that are part and parcel of trading, and it really does bear repeating. And I'm not going to go on about it, but it is a risky business. Please don't use money that you cannot afford to lose. And in some markets, you can actually lose more money than you originally started with. And that's certainly the case in the spot Forex market, which is what we're going to focus on in this session. So that's out of the way. And David is now joining me. Are you ready, darling? Yeah, all done. And as you can probably hear, we have some dogs as well. I'll just quieten them as well, because we really don't want them interrupting us. Hold on a second. Trading, the stress from trading is the least of our problems. It's all the technology and everything else. Okay, let's just pop that down there. Thank you. And I know we've got people here who are already familiar with our quantum indicators, and we will be taking a look at those as well, and basically see how we apply them with our methodology of volume price analysis. And we're just coming up to the London Open, obviously. That's when a lot more traders are going to be joining the markets. And in fact, what I'm going to put over now is, let me put over my profile of cable, because it's been very interesting. Obviously, since yesterday, we've had the Fed, and with a lot of volatility in the dollar. And what tends to happen, certainly in these crossover sessions, and it's part and parcel of what we're going to talk about. We're really going to talk about volume and sentiment, and volume from a number of different perspectives, not just the tick volume that we see on our charts, but also volume in the sense of participation, of activity, and why the tick volume that you get from your broker in the spot Forex market is perfectly valid, and you can certainly use it as part of the VPA methodology. But you do have to be aware this market, although it's 24 hours, is actually divided into three distinct sessions, of which one of them we are coming to now. We've had Europe at 7, but now we have London coming in, and all sorts of tricks are played on traders at these crossover sessions, and also the importance of knowing which currencies and which currency pairs are likely to be more active at different times of this 24-hour market. And on the sentiment side, we're going to be looking at is what are the factors that are going to affect either a currency or a currency pair, and are some factors going to drive that currency pair more than others. And today, the other reason for looking at cable, first of all, because we're coming up to the London Open. Secondly, we have a very important piece of item of fundamental news. We've got one of the PMI releases for services PMI, which is hugely important for the British pound. And we've got some resources that we'd like to share with you to help you in in you being able to increase your knowledge of what is likely to move either a currency or a currency pair. But before I keep on talking, let me introduce you to David.
Thanks, darling, and a very warm welcome to you all, wherever you are in the world. And I think we've got people from literally around the globe, so a very warm welcome from me as well. We run this, if you've not joined us before, we run this as a two-hander. We're primarily focusing on, we run two primary platforms. The one you're actually looking at the moment, which is a little bit different from the MT4, is actually, if you're wondering why there are different time frames down the left-hand side of Anna's screen, the reason for that is because she's actually running on MT5, because we've literally just ported over the indicators and launched those for the MT5 platform. So if you're looking at the screen and you're wondering where all these different time frames have come from, this is MT5. It looks very much the same as MT4. But it has a lot of enhancements, and this is one of them in particular, is the additional array of both standard and the custom timeframes that you then have available on MT5. As you can see, it looks like MT4. It has that feel of MT4. It's very intuitive. If you're running MT4, you'll be instantly happy with running an MT5 platform. But of course, what it also offers, it opens up an array of, it is a multi-asset platform, so you have commodities, you've got indices on here as well. And of course, if you're familiar with us, you'll be very aware of the fact that despite the fact that you're trading in the Forex world, the Forex market sits at the heart of the capital market. So in terms of relational aspects of market behavior, you've always got to have an eye on what is going on in terms of equities, in terms of risk. You want to know what's going on in terms of commodities, particularly if you're trading the commodity currencies, and so on and so forth. So the MT5 platform really does deliver that. It's not hugely available from all the brokers around the world, but certainly it is increasing in popularity, largely because in the last sort of 18 months or so, MetaQuotes themselves have made some significant changes. One in particular, which was a little bit of a barrier for Forex traders migrating from MT4 to MT5, was very much in the hedging opportunities available, where you could go long and short in the same pair. That is now available on many of the MT5 platforms. In fact, this is available here, as you can see at the top. It says hedge. That's really what it's talking about there. I've got NinjaTrader running on my side as well. We are developing other platforms. We've got TradeStation, which we'll be working on during the course of this year as well. And we're always adding new indicators too. We've literally launched the Camarilla and the Euro Index in the last 2 or 3 weeks as well. So that's included in the full package. I'm just going to pass back to Anna. I'll be here, happy to answer questions on air or in the chat box. If they're short questions, longer questions, we'll answer on air for you. And as always, when we come up, part of the reason we run this session at this time is because the crossover period from one session to another, where we're moving out of Far Eastern Asia and into the European and ultimately into London, that is when you see this huge pickup in activity, huge pickup in volume. And it's also an opportunity for the insiders and market makers to actually create a whole series of traps where traders will jump into a trade, move through the session crossover, and currencies in focus, particularly obviously the European currencies, you will tend to get trapped in positions, because that is an ideal opportunity which the market makers and insiders never miss. Trust me. Just going to pass back to Anna at this point.
A really good question from Gary, and I will come back to you on that one, Gary, because it can seem really overwhelming, because, as I said, not only do you have to be aware of the crossovers, there are this market, all the markets, but particularly this market is hit. It's the first market to react not only to fundamental releases. The good news is we know when those fundamental releases are going to, are going to happen. So at least we can kind of plan ahead for that. But what we can't plan ahead for are the unexpected ones. We can't plan ahead for members of central banks suddenly making comments that are out of context, or that the markets are not expecting. We've got no control over that, and we certainly don't have any control over any geopolitical events. And not so much now, but if you recall a few months ago, every time Kim Jong-un, is it Kim Jong-un or Kim Jong-il, sneezed, then the markets would sort of take a swoon. And the Forex market, because it is the market that expresses where this sentiment, if you like, whether it's fundamentally driven, whether it's geopolitical, or whether it's a sort of a change, it's picking up a change is the one where it is picked up the fastest. Now that means, well, first of all, you have to be aware of that. That's the first thing. Does that mean you have to, when are you going to trade? Well, if you took that, if you try and navigate your way through and say, well, I'm not going to trade here, I'm not going to trade there, you would probably spend more time not trading than trading. But there are ways that you can approach this, certainly on the fundamental side, because what normally happens ahead of big releases, and tomorrow will be classic because we've got NFP, you have something called positioning. And so there's absolutely nothing wrong, if you're a short-term trader, to look for opportunities in the run-up to news events, because what happens then, excuse me, because what happens is as I said, in this positioning, and then perhaps if you're a shorter term trader, then just before the news is likely to be released, what you will see is the chart, the market will go into consolidation as traders wait for the news, and then as I said, you can come out, you can close your positions, wait for the news release, and then perhaps trade the fade, the reaction, if you like, afterwards. Or, as some traders like to do, is actually look at your chart, do your analysis, and perhaps use limit orders. And if they come off, they come off, and if they don't, they don't. But as I said, the cable today is a great example, because in an hour and a half or so, we are going to have the services PMI, and there will be an opportunity to take trades on the faster time frames, but perhaps going up to the news, come out, wait for the news to be released, and then, as I said, take a trade to the reaction. Now, if you're a longer term trader, if you're looking at the hour and the 4-hour charts, the reaction that you get to these items of news, yes, it will be probably no more than a blip, no more than a bit of noise, as it were. And the chances of one news release changing the direction for a pair majorly it can happen. So don't get me wrong, it can happen, but most of the times, it'll be like a little bump in the road, and the chart will simply carry on in its own sweet way. So that's what I've got to say on that. We're just going to wait for the London Open. But while we wait, I was talking about volume, how you see volume as participation, how we see volume as confirming price action, or is it an anomaly? But in the Forex market, because we have these three very distinct sessions, we have to be aware that we have to read the volume in context and also relative to that session. And the best way I can describe this while we're looking at what's happening on cable is the great thing about the MT5 platform is that it has an 8-hour chart, which actually very, very neatly breaks up these sessions for us. So we have the Asian session, we have London and Europe, and then we have the US session. And this is a perfect example of it. I hope it comes through okay. If you look at these volume bars underneath here, this session here was yesterday, part of London and going up to the close of the New York session. And you can see here from this volume bar underneath, that is much, much taller than the one next to it. Now, that doesn't invalidate this little volume bar here. All it tells us is that in this volume bar here, which was in Asia, and in fact, I think there was a holiday in Japan as well, you would expect that to be down there, partly because there are fewer traders in this session, and also it's also affected by the fact, I think, as I said, Japan has the Japanese traders have been on holiday as well. But this profile, this volume profile for cable is going to be very, very typical. So for you for using volume, first of all, to assess whether a particular pair that you're interested in trading in a particular session, excuse me. Sorry about that, I do apologize. Using the 8-hour chart in this way, it first of all, it confirms what I've been saying, in the sense that each of these sessions has its own level of participation and activity. So when you're selecting a pair, we've got someone, as I said, from California. Wherever you are in your time zone, you have to be aware of the pair that you're looking to trade. Is it actually going to be very, very active? Now, very, very quickly, before we move back to the faster time frames, if we put something, say, like the Aussie dollar on here, just move that over, and with the Aussie dollar, there we are. The volume profile is a little bit more consistent. So what that tells you, I mean, this is exceptional, because this is obviously what happened with the Federal Reserve yesterday. But if you look at the volume profile, yes, you do have the dips in the Asian session, but they're not quite so dramatic as they are for cable. So what that tells you about Aussie, what also tells you about Aussie dollar, is it's one of those pairs that actually is traded quite a lot throughout the 24-hour session. So that is volume in terms of activity, in terms of participation, and also helping you to choose your pairs if you're going to be a trader that likes to focus on maybe 1 or 2 currencies and 3 or 4 currency pairs, because there's lots of decisions you have to make as a trader, and that is one of them. Or are you going to be a complete guerrilla fighter? You're going to come to your terminal in the morning and you're just going to look at the charts, and we're going to look at some indicators that will help you select the best candidates in terms of currency and currency pairs. And you say, right, I don't care who they are, what they are, I just want a pair that is going to move at this moment, and I just want to make some take some pips. So that's what I want to say about volume. And finally, before I pass to David, what I want to say about tick volume, and in particular with the spot forex market, is you will read that the volume as expressed in these charts is not good enough. It's tick volume, it's activity, it's changes in price. It is not 100%, because there is no central exchange with spot forex. It's not like futures volume. It's certainly not like stock volume you get in stock. In some ways, does that invalidate what we are trying to do in terms of volume price analysis? And my answer, and what David will say as well, is no, absolutely not at all. It is good enough. The tick volume, particularly if you have a broker that has a good quality feed, it is good enough for you to make your analysis of volume price analysis. But you have to be aware that the volume that you are seeing is both relative and has to be read in context. That's what I want to say on that. I just want to pass over to David if he wants to add anything to that. Okay, he wants me to go back to the Aussie dollar 8-hour chart, and we'll just keep an eye on cable. And I'll explain a little bit about this chart over here, which is our raincoat chart as well. But I'll just pass over to David.
Just pull up the Aussie. I think it was the 8-hour we had before. Up in the middle, up. That's it. There we go. I just wanted to pull this back up again, because it really does go to the heart of, I think it was the question Gary was asking about this market, which is as we all know, it's promoted as one which has 24-hour access. And whilst that is undoubtedly true, and in fact it's true of many other markets as well, not least of all indices, commodities, which you can trade on Globex 24 hours a day. So it's not the only 24-hour market, but it is promoted as one where you can literally jump in at any time. And as Anna's already explained, that is certainly not the case. You have the session crossover period, you have massive changes in liquidity and volume, and in addition to that, also focus on particular currencies and currency pairs, which rotate around that 24-hour axis. The reason I wanted to highlight this is because it really does go to this issue of, as a trader, what is your time horizon that you're going to focus on? Are you going to focus on the much broader, longer term, such as this, for example, where you're on an 8-hour chart? And in trading in this very long-term approach, clearly the issues of fundamental data come and go. They are automatically built into the stop loss positioning that you would have in such a position, because it would be much wider. And really, that's what it boils down to. As an intraday trader, and when I say intraday, I'm talking probably up to the sort of 30-minute and hourly sort of time horizons, where you're in that, you're down towards the faster end of the spectrum. On those sorts of time horizons, you've clearly got to be aware of what is coming up at you in terms of economic data, in terms of session periods, in terms of statements, in terms of policy statements, all the political stuff and everything else that goes along with it, which is likely to impact on an intraday basis. And of course, in addition to that, you get certain statements which come completely out of the blue. But generally speaking, as an intraday trader, that's what you've got to be aware of all the time. And you've got to make decisions based around that. Do you trade ahead of it? Do you wait until after the news has gone through? What's the next thing that's coming up? Et cetera, et cetera. All of that has to be factored into your decision making. When you're a longer term trader, as indeed here, I'm not saying it's not of interest, but your approach to this market will be very different. And if you're trading off the dailies and the weeklies, then it's much more akin to, you are looking at things like, for example, interest rate differentials. You're looking for diversification in terms of monetary policy between major trading currency blocks. And you are taking a much longer term approach. That's not to say that fundamentals won't play a part, but as Anna said, what you tend to look at in terms of the fundamental data when you're on slower time horizons is you're looking for trends, in pretty much the same way that you might be looking at a chart as a trend trader. It's not the only way. There are many different tactical approaches, not least of all reversal trading or trend trading or breakout trading. And again, you've got to make decisions about what it is you're looking for in that particular chart. But certainly when you're trend trading, it is exactly the same when you're looking at longer term fundamental analysis, because what you're looking at is really trends. And if you've ever looked over to Forex Factory, on the right hand side, there's a little icon there which you click on, which actually shows you a chart of the data historically, so that you can see what the trend is in jobs, you can see what the trend is in employment data or in inflation data or whatever it may be, the metric you're looking at. And that's the reason that one piece of economic news generally does not reverse a longer term trend. It'll cause the market to be volatile. It's an ideal opportunity for the market makers to make money, because they'll move the market in one direction and move it in the other. And that's one of the great applications of volume, where you can actually see whether the move is a trap move or whether it's a genuine move, purely through the prism of volume. Are the market makers participating, or are they not participating? But over the longer term, one item of news is unlikely to change a trend, but when you see a change in trend on the economic data, in much the same way as you look at a chart, on a price chart, a change in trend, that's when things start to change. So the point I'm making is this is an ideal example. It's a much longer term. How long have we been? 19th of April, I think the bearish sentiment trial started to kick in. So, this is a 5 or 6 week time horizon. Equally, you had a bullish phase of price action throughout April, or certainly the latter part of March and into mid part of April. Now the bearish trend has developed quite strongly. And if you're going to take advantage of that, that's perfectly fine. But your stop loss position and management will be much wider to allow for the intraday volatility, which is part and parcel of trading. If you're an intraday trader, then you've got to factor that into whatever decision making you are taking to market. So it is very much, when you set your stall out to trade, indeed in any market, not just the Forex market, you've got to have a very clear idea of what it is you are attempting to do. Are you attacking this particular position as a guerrilla fighter? You're going to get in, take something and get out again? Or are you looking at it as a reversal position where you're going to maybe holding for longer term? Or are you looking to develop this market into a trend position, either waiting for the trend to develop, or are you looking to jump on a trend in your chosen time horizon? Those are all the things you have to define, and you have to define your, what we call the window of opportunity. So your time frame is really restricted to that. So if you're a scalping trader, probably the slowest chart, you might have a daily chart up for context, but your really focus of activity is down in the 5, 15, 30-minute time horizon, and you just have a daily chart for context. If you're an hourly trader, you're going to be looking, well, certainly in terms of MT5 at any rate, if you're an hourly trader, you're going to have the 4-hour, the 8-hour, and probably the daily as well, just to give you context again and to help you make that decision, those decision-making processes. I'm going to pass back to Anna at that point.
Right, just let me just put that back to what it was before. And just to say, what we're covering in this webinar at the moment, we'll cover once, we'll do the recording, and then, I don't know why that's not moving over. And then in the next session, we'll move this forward, because we certainly don't want to hear the same things all the time. Why isn't that updating? Oh, not to worry. Oh, don't worry, don't worry. I'll just get another one up. It's easier. Let's put a template on. Sometimes technology just doesn't work. There we are. Just bring that back to what Cable is doing. Let's move that back to, what was it, 3-minute chart. That's it. And there we are. And we'll just see what's happening with the raincoat and whether it's actually going to do anything. And we can see here, going back to with the surge in volume that we have at the London Open. And this is really what this is representing here. We have this move, this strong move lower, lots of volume coming in. Then the next volume bar comes down. The volume is not so high, but also you have to notice the wick to the bottom of the candle, which obviously tells us that yes, the selling is coming to not an exhaustion point, but it's certainly coming to a pause point. Why? Because you wouldn't have that wick to the bottom of that candle, and also the selling, if you like, the selling pressure has certainly diminished. Then we get an up candle again with a deep wick to the bottom. We also have a little fractal. The fractal is a bit like our little yellow pivot here. It tells us, I think it's based on a 5-bar analysis of the price action, and it tells us that there is price support coming in. The wick tells us that we have a blue bar, and the volume, it's not huge. It's certainly not as much as the volume that was in this previous bar, but we know there was buying in there, which is under this wick here. Then this is the interesting bar. The price just seems to reverse out of thin air. It just crashes down. But look at the volume, because we have to look at the context of this volume. We know we're in the London session. We have a very wide bar here. We've got a little wick to the bottom at the top, so we know there's a bit of selling pressure coming in. But look at the volume. What that is telling us very clearly is that is an anomaly. With VPA, with volume and price, what we're looking for is agreement. We're seeing that is this price move lower, and the volume that accompanies that, is that consistent with what we're seeing? And we say, yep, that looks pretty good. What are we seeing here? But because we have a wick to the bottom of this candle, it also tells us that there is price support coming in. The selling pressure is being absorbed. The buyers are stepping back into the market. The next candle tells us as well, and as I said, we have the fractal that gives us that little bit of extra confidence. But this down move here and this candle here. Now, a lot of traders, certainly if we move up to a slower time frame, they said, oh, well, that's just a little, that's just a little pullback, a little correction, because it's going to carry on lower, because maybe they've got an opinion that they think the cable is going to go lower. But looking at that one candle with that volume, nuh-uh, that is an anomaly. If that was going to carry on, if those buyers that have stepped in here and stepped in there were going to be overwhelmed, that down candle would have to have a heap more volume than it has at the moment. Then we have some more buying coming in, not a lot of volume, but look at the range of the candle. The range of the candle with the volume underneath it, it looks okay. It's in proportion. It's not, it's not anomalous, as we say. Now we've had this very, compared with the other candles, now we've had quite a big candle. Reasonable amount of volume, well, certainly more than this one, but the range of the candle is quite high, and you think, okay, well, I'll keep an eye on that. Now, what's also happened on this chart, on the 3-minute chart, is the price action has gone back into what we call the volume point of control area. It comes from market profile. It's gone back into an area of where, if you look over to the left, quite a lot of congestion. And it's also an area that's sometimes known as fair value. It's an area where traders have been quite happy to buy and sell, not really pushing the price strongly in one direction or another. We certainly had this strong move lower. Then we had a base at 135.84, and it's now pushing back into this congestion zone. Now, to go through this congestion zone, it will do one of two things. It will either pause there and just simply carry on in congestion, particularly if we were coming up, say, it was going back to what Gary was asking, if we were coming up to very close to a news release, the chances are it would simply, traders would say, do you know what, there's a news release coming out. I'm really, I'm going to step back. Let's see what the market does, and then I'll go back. But because we've still got an hour or so before the news release, what often happens is it will attempt to go through, but it's going to take effort, and it's going to take effort because of congestion. Where you see congestion areas, you're going to have more volume. It's going to struggle. You're going to have more of a battle, if you like, between the buyers and the sellers, as we are seeing here. And in fact, this is a very nice candle which is being posted at the moment, because it looks like, is it going to be a down candle? There's a lot of volume coming in. It's also got a deep wick to the top of the candle. There's a lot of price action going on in this candle. Now, I'm sticking to one time frame at the moment because I really want to get these concepts over to you. Before we look at multiple time frames, before we have other tools and we have other approaches that will make this easier for you. But what we say in our Forex program traders is, this is how you start. This is how you start to read price action and volume. Once you start at this foundation level on one chart, one candle, a volume profile, and you begin to read what is actually going on with the price action and the volume. So you really, really get that fixed in your head. Then you move it over to a little group of candles, and then you go over to multiple time frames. But if you look at it this way, because what this tells you more than anything is price action is great. We can pick up so much from price action, in the sense of, if you understand about the importance of the wicks, the different types of candles that you see, doji candles, hammer candles, shooting star candles, spinning tops, mornings, etc., etc. That's fine. That's absolutely fine. But once you start to put them together with volume, you are in a position where you can anticipate what is likely to happen next. So when you see a candle, this little candle combination that you see down here on a 3-minute chart, and it's often best to use a slightly faster chart than a slower chart, because the slower chart takes a long time for the price action to develop. In being able to anticipate and read the price action with the volume, what it does one key thing. It relaxes you. it gives, and in relaxing, it gives you confidence. So that if you are in a position, if you've decided to take a position, perhaps from here, if you are a breakaway trader from here, from a congestion area, you say, yeah, I've taken that little move lower, but you suddenly see this coming in, and you see this candle here. You think, do you know what? This isn't going to go any further. But it gives you the confidence either to stay in a position or to take a position. Now, what's happened now? We've had a candle with a deep wick to the top. It's at a congestion area. We know it's at the volume point of control, so we know price action is going to slow. It's going to take effort if this bullish move is going to carry on higher. It hasn't. Volume is coming in certainly on the selling side. We know that because we've got a wick to the top of the candle, and now this candle is forming. You say, well, is it possibly? And perhaps I've not been in this position. Well, is it now perhaps an opportunity to go to, I want to step in because I really think this is going to sell? Well, we have to wait and see. Well, it certainly looks as though it's trying to break away. We have to see what the next candle is. At the moment, when it's oscillating around something like the volume point of control or around a congestion zone that we see here, we don't spend enough time looking over to the left of the chart. Probably, maybe wait. Maybe this was just a temporary, little pullback, as it were. But we will wait and see. And it looks certainly from this candle here, we've got some price support coming in. But if that was going to carry on lower, then you would expect more volume, certainly on the selling side, to come in. So maybe there will be enough buyers out there to push this higher. Now, the next question is, where is it going if it's going to carry on higher? Well, we have some very clear levels here. This is from our support and resistance indicator. The levels here on a solid line tells us that it's quite strong resistance. A hatched line is not so strong. This level here, which is the R3, this is from our Camarilla indicator. The Camarilla is based on price action, and the values are updated every day. And the importance of the Camarilla is that they give what we call hierarchy. They tell us which of these levels are more important than others, and levels where something is likely to happen. Perhaps there's going to be a reversal, perhaps there's going to be some kind of support or resistance. But we won't go into that at the moment because I really just want to see what the price action is going to do. But what may also happen is because we are at this volume point of control, as this area of what we call fair value, price action may simply calm because traders know we've got an hour to go before the news, and it's just going to, as I said, pause, if you like. Now, we use this in conjunction with the raincoat chart. A raincoat is pure price action. But what the raincoat does, particularly if you're on the faster timeframes, is it basically takes away the noise. You do get the little wicks. You can see little wicks as the price action is developing, but what it does, that's because there's a bit of volatility in there. But as you can see here, it just smooths everything out. And what is actually telling us, it's confirming what we see on the time chart, is that we are really in a congestion period at the moment. To the upside, if this is going to go higher, it's got to get through 36.05, and to the downside, well, it's had an attempt to break through 35.91, but that's the range that this is stuck in at the moment. So as a trader, if you're not in this position at the moment, you have an option. You can either put a limit order in above or below, whatever the time chart is telling you. Or if you just want to put a market order in, you would wait to see what the price action is going to do. And as I said, this is purely looking at the charts. You would use them in conjunction. This is a non-time-based chart, and time has nothing to do with the raincoat chart. I've actually set this to 2 pips. So every time 2 pips goes through the market, one of these little bricks will form. Raincoat actually means brick. Now, I think I've any particular reason for using the 3? No, not at all. With MT4, you've only got 1 minute, 5 minute, and 15. And it's just what I've looked at myself. I find, I don't know why, the 3 minutes, it's not as fast as the 1 minute, which can be very noisy, a little bit faster than the 5, which I find a little bit too slow. And in fact, I would use this with the 3, the 6, and my benchmark chart would probably be something like a 20 or a 30, or sometimes even an hourly chart. And in fact, as David said, if you want to see the context of this price action with the other time frames, I'm just going to move over, just pass over to David, and I'll show you this on the on my MT5 platform here. Hold on, I think it's here. Oh, here it is. Darling, can I pass over to you? I'm just going to, because David said he made a point saying, well, when you look at a price action, go and see what it is in the context of a much slower time frame, even the 8-hour chart or the daily chart. So you basically want to know if you are going to take a trade on the faster time frames. Are you going to go very much against the sentiment of a slower time frame, or are you actually going to go with the sentiment in that slower time frame? There's nothing wrong with taking a counter trend trade, but you have to know what you are going against before you go into that trade. Hold on a second. I'll just pass over to David, because I've actually got a nice, yeah, and I'll swap screens. I think, have you got, I'll look for my screen, my other screen. I'll pass over to David because he's got the, he's got the NinjaTrader platform, so we'll look at something else, and I will see the chart that I was looking for. Find the chart that I was looking for.
Just going to switch screens over to NinjaTrader for a moment. Bear with us. There we go. That should be, just looking at Anna's screen, that should be coming up any minute there. There we go. And I really just wanted to highlight this issue of looking at multiple time frames, and what we're looking at here is the multiple time frame as represented by the currency strength indicator. And I've got 4 time frames here. I've got the 5 minute, I've got the 10 minute, I've got the 15 minute, and I've got the 30 minute over to the right. And what's interesting about this is that the currency strength indicator almost tells you clearly, visually, and almost without looking at the chart, what is going on in a particular pair. Now, we've been focused pretty much on cable, on the pound dollar, and the pound is the yellow line and the dollar is the red line. And if you look across through the various time frames, you can see that we've had this sort of generally sideways price action, little bit of bullish, little bit of bearish. And also the same is true for the dollar. It's been, we've had some buying of the dollar here. Now we've got a bit of selling coming in on the 10 minute. Same here over on 15, and it's kicking down on 30 as well. So when you look at the currency strength indicator, and also particularly across the time frames, it gives you a sense without even looking at the chart what is going on in terms of that particular currency pair that you may be focused on. Now, if you're looking at cable, then we know there's news coming up in an hour or so, just under an hour. So we know for a fact we're not expecting to see any strong moves. It is a fact of life that ahead of news releases, you're always going to see a congestion phase build. You're going to see markets calm. You're going to see some entrapment going on, probably immediately ahead of the news. And then when the news comes in, volume picks up. You'll see volatility. You'll see reversals. You'll see stop hunting, all the rest of it. And then the market will calm and the direction will be established thereafter. So ahead of any news release, that is what you expect to see. So when you see that on the CSI, on the currency strength indicator, what you're seeing is strength, weakness, but you're also seeing lack of interest. And when the lines start to rotate in the middle, this gray line, this New Zealand, for example, those are, unless you're obviously looking at it as a breakout trade, you're actually searching out congestion. Then if you are looking for either reversals or you're looking for trend, then what you're looking for constantly, and this is a nice example here, the euro is this orange line, it's rising very strongly on the 5 minute. So there is euro buying in the market. There is euro buying here on 10. There is euro buying here on 15. And there's euro buying here right the way out to 30. So what this tells you loud and clear is we've got some pretty strong euro buying coming into the market right now. Where is that like to be reflected most strongly in terms of development of a trend? Is it like to be against the Swiss franc, this green line? No. Why? Because the green line, the Swiss franc, is rising with the euro. That's not to say that there wouldn't be some diversification in strength, but basically what you've got here is you've got buying of euro and buying of Swiss franc in the same time frame. Now, the strength of buying in one may be stronger than in the other, so there may be stronger buying in the euro than in the Swiss franc, which will develop a trend of sorts because the strength in euro is stronger than in the Swiss franc or vice versa. But the actual development of that trend will not be as strong as if you were looking at the euro against the Japanese yen, which is falling with equal speed and momentum. So without even looking at a 5-minute chart, I can tell you that for the euro yen, there will be buying of euro and selling of yen, and that will be developing into a bullish trend. That is reinforced on the 10-minute, exactly the same picture, very strong buying in the euro, counterbalanced with very strong selling in the yen. So you'll see a strong trend. Over onto 15, strong buying in euro, strong selling in yen. And out the way, right the way out to the 30, you've got exactly the same. You've got very strong buying in euro, and you've had the crossover, and you've got strong selling in the Japanese yen. And if you're jumping into a trend on this slower time frame, then that trend is already underway because you've had selling of the yen. We had a bit of a pickup here. That selling of yen has continued. We had buying of euro, blipped a bit here. Now it's picking up again. And this is always the issue because going back to Gary's question, which we keep coming back to, which really goes to the heart of what this business is about as a trader, you have to make some pretty basic decisions here. If you're a 30-minute trader and maybe a 60-minute trader out to the right-hand side of this group, if you will, then you're in here. Now, I can assure you at some point when you're trading on a 30, 60-minute time frame, what's going to happen over right at the other end of the spectrum down here is the euro is going to roll over. Might be seeing it now, indeed. It's flattened off. The yen's flattened off. If you're a scalping trader, you might be looking at this as a reversal opportunity. Personally, I wouldn't because, I'd like to see it a little bit deeper at top and bottom. But nevertheless, that's something you might be looking at. Now, if that develops into a true blown reversal, this is going to roll over, this is going to roll over, this is going to roll over, and ultimately right the way out to the 30. If you're a 30-minute trader, you might well be sitting through this as a pullback or a minor reversal on the slower time horizon. And that is what this business is all about. It is all about self-similar price action. In other words, the price action that you see on 5-minute may be completely counter to what is going on an hourly chart, which is why a trader on a 5-minute chart may be making money to the short side, whilst you as an hourly trader or a 4-hourly trader, whatever it may be, are just sitting there looking at the longer term trend, the longer term picture, if you will, where all you are seeing is a minor pullback in your longer term chosen direction. And that's what this business is all about. And that's why it's so important. Whatever your approach is, that you use multiple time frames, and that applies equally both to the charts and also to the indicators themselves, of which the currency strength indicator, we will start with the primary indices, of course, which are the dollar, the yen, the euro. So that gives you a heads up on what is going on in those three key currencies. And then you move to the currency strength indicator, which is the first port of call, because it really gives you a global picture without even looking at a chart of what is going on and which currency pairs are the ones to consider for analysis and which are those that perhaps you don't want to consider. Now, what's going on with the pound? We've seen the pound now starting to pick up a bit again. We're starting to see some bullish momentum into pound. So we're seeing buying of the pound. Is that against the dollar? Yes. For the time being, we're starting to see the dollar sell off again. So we've got a little crossover here developing. So with pounds rising, dollars falling, just crossing over here, pounds starting to rise again, dollars kicking down. And what have we got here? We've got it's right down the bottom here. But from a 30-minute perspective, that is really looking like congestion. And if you were going to trade that as a trend, you'd want to see these two pairs start to separate in very much way the euro and the yen are doing. And you can see also on 30-minute, we've got this very, very strong buying in the Swiss franc here also. And that's really the way that you have to look at this market and you have to approach it. I've got the multiple currency arrays set up as well, which is really taking on to the next level, which is looking at the complex. But I'm going to pass back to Anna at that point. Can I change screens again, I think? Yep.
On my profile, I'd had some other charts in front of it, and this is a typical sort of configuration of charts that I would have, looking at a raincoat here, a non-time based chart, the 3-minute chart that we were paying closer attention to. I've also got the 6, and here, as I said, it's kind of what I call a semi-bear chart, to give context, as David said, to what is happening on the faster time frame. This is on the hour, but I can easily put it on the 8 hour, and we can see here we've got a little bit of it looks like it's trying to rise, certainly after what happened yesterday. But I'll move back to the hour because I think that's much more relevant to what we're looking at the moment. And going back to the 3-minute here, we've had this little move away, as you can see here, and it looks like a really nice move away from the volume point of control. It managed to stagger back to this sort of congestion zone, but the volume is dying, and that a lot of traders say, oh, that's a fantastic move, look, it's moving quite fast, but then not looking at the volume profile that is accompanying that move really is going to get them into an awful lot of trouble. Does that mean that the price won't carry on higher? No, not at all. What it does, it just will suck in even more traders basically on the wrong side of the market. And actually, if we expand that up to the 20-minute chart, which is quite nice, and you can see here the 20-minute chart is quite interesting, because in fact is the price is trying to pull away again from the volume point of control here, which is a congestion period, a fair value area. And this is the price move. This is the move that we've seen on the faster chart, which has been a nice move if you're only looking to take a few pips out of the market. But the participation, the activity under that candle is not consistent with what we're seeing on the price action. And this is what volume will do for you. As I said, we looked at volume in terms of the session volume, the participation, the activity, and also in helping us to read the price action. And going back to the raincoat chart, and I said earlier where this was the area, this resistance here at 36.04, and you can see here it is trying to move higher. Now, does that mean that it's not going to move higher? No, not at all. But because this is based on pip value, it's not exactly racing up. So it is picking up, if you like, what we are seeing on the time charts, that the price is moving higher, but it's not moving higher with a huge amount of conviction, and that conviction being the volume. Wanted to spend a lot of time on this particular pair. Obviously, there have been moves in other pairs, but we just wanted to get over this particular aspect or lesson, if you like, about volume. And before we move over to look and talk about sentiment, and I said to you, there's some resources where you can go and check out, not only from the charts, but just to see the pairs. Perhaps you already have a little collection of pairs that you like to trade, or you're thinking of trading, and you want to check out when they are at their most active, and when it's possibly a good time to trade. If you go along there's a couple of sites. One is investing.com, and they have what they call a Forex volatility calendar, as you see here. This is for euro dollar, but you can just select the pair that you're interested in. And it gives you the daily volatility in pips. And this is really important as well to understand, because with the volatility here, it actually means the range that it's going to be, that it's moving. And sometimes what happens, particularly when pairs move into very long-term congestion, you will find this sort of falling all the time. Now, the implication for you as a trader, particularly if you are, as I said, on the faster time frames, back here, this is on the, I think that's the 5th of May of April. Yes, it's the European way of dates. The average, if you like, the day was over 90 pips, but if it carries on falling, and with the euro dollar, it's, there's some days when it's only been moving 30, 40, 50 pips on a day. Can you imagine how much more difficult that would be to take a trade, as opposed to when, it's been a nice wide ranging day? So you've got to understand that. It even breaks it down to the hour. And this is the 20. And here you can see this is where New York closes. We move into the Asia session and look at the participation. This is volume in terms of activity. It's very, very low compared to, this is 1 o'clock, 2 o'clock. This is obviously New York, London, and Europe. Lots of participation, lots more opportunities. Is there an opportunity to take there? Well, yeah, but it's going to be very, very difficult. And then it picks up again at 6 in the morning, because obviously Europe is waking up. And it even tells you the days that the pair is likely to be more active, and it's based on previous data. And you can carry this exercise yourself. You can look at, check your pairs, and some traders do. And then you can focus. You can say, well, I've got maybe 5 or 6 pairs. I know that pair tends to move more on certain days. There could be lots of reasons for it. It could be because it's the run up to fundamental news, etc., etc. There's all sorts of reasons. And there's also a very nice little tool in Oanda where it tells you this is much more sort of real time, and it tells you what's been moving, what's not been moving. I think David's been looking at Euro Yen. He's got some positions in Euro Yen. Euro Yen's been very frustrating lately, hasn't it, darling? It has, and you can see why. It's not been delivering the range that it normally delivers. Right. Yes, there is a recording, so please don't worry. I'm just going to talk about sentiment. Do you want to? Is there anything else you want to say? Yeah, fine. Just because we've run out of time as usual with sentiment. By sentiment, what we actually mean is sentiment towards a currency and, as I said, a currency pair. How do you judge that sentiment? And the thing to remember with the Forex market is that individual currencies are representative of market sentiment. So at the macro level, if you like, you have a currency such as the Australian dollar. It's very, very tied to commodities. Commodities are perceived to be risk, if you like. They represent risk. They represent, if commodities are being bought heavily, particularly commodities that are used in industry, and for the Australian dollar, particularly if the Chinese economy is doing well, it is perceived to be everything is rosy, everything is great. There'll be lots of buying of the Australian dollar. It's a risk-on currency. You'll hear this expression all the time. So there'll be a positive sentiment towards that currency. And how we judge this sentiment is obviously, we've got the tools we've developed, as David said, we've got the currency strength indicator. I'll just move over to, so on my default here we are, our currency strength indicator, which tells us from a buying perspective and a selling perspective what is actually being bought and sold in any particular time frame. So when we see here perhaps the Aussie rising, is that telling us that commodities are rising? Is the market feeling very positive? So that is one way of gauging sentiment. if you have the Aussie as one of your currency in one of your currency pairs, you have to be aware not only of the technical picture, but moving back to that site that I had here, you have to get to know your currency and how it reacts in the currency pair that you are looking to trade. This is a great site. It actually is like a heat map. And what it does, it breaks down the exports and imports that a particular currency imports and exports. Because what it will give you is it will give you that extra bit of information that you need to be able to tell when a currency is likely to be bought, when the sentiment is likely to be positive, or when it's likely to be negative. And here for the Australian dollar, 30% of their exports go to China. So if you have the Aussie as part of your, as in one of your pairs, you really have to know what is happening in China, because that is going to have a direct impact on the Australian dollar. So that is sentiment towards a currency based on its role in the market, how the market perceives that currency. And then we have sentiment in the sense of the currencies such as the dollar, and here we have the Japanese yen. Here we have sentiment in terms of risk on and risk off. The Japanese yen in particular, if the Japanese yen is being bought, then generally speaking, the market is, equities will be selling off. If the Japanese yen is being sold heavily, you will know everything in the garden is rosy, and equities will generally be rising. And the Aussie dollar and the US dollar here, sentiment, it acts as, you know, it's the currency of first reserve. If it's been bought heavily, and bought heavily particularly with gold, then I can assure you then the financial, the whole world is very close to meltdown, basically. And the other thing I like about with the US dollar is on the MT5 platform, and in particular this broker that I've got, I've only got a demo account with this, they actually have the Dixie, which is the futures index for the US dollar. And if you have the dollar in any of the pairs that you trade, then you really must have this. You must know what the US dollar is doing at any particular time. And if you're trading the euro, even more so, because they are inversely correlated. Because the euro is the biggest element of the Dixie, what you see in the Dixie as this goes down, the euro dollar will go up. And we'll just have a quick look at what the volume is doing as well. Yeah, that's quite a nice volume in the euro dollar. As you say, they were buying the euro on the CSI, and in fact, the CSI was showing. If I move over my let's move it on the faster time frames. Yes, there was there sort of quite a nice buying of the euro dollar. Yeah, this is the 15-minute chart here. This is the gold line, and that is actually reflecting. I've just got the 12-minute chart. Let's move this to the 12-minute as well. Yeah, in the euro yen. So there's nice strong buying of the euro, and we can see here an equally strong selling in the Dixie. So that's a little bit. I'm sorry we've not spent as much time on the sentiment side. Maybe we'll pick that up next time, because we really need the indicators to give us a quick bird's eye view of. The reason we've developed certainly the currency dashboard, which we've had a very quick look at, as we've had here. If I just move that over, this is my version of how I put my dashboard together. And that is I have one CSI, I have the array, I have my heat map, and I have two currency matrix. This gives us a very quick look, an instant view of sentiment towards not only a particular individual currency, but currency pairs. I think I was being a little bit ambitious in trying to cover volume and sentiment in one webinar. It's just too much to cover, but we will be sending out another link, and we will cover sentiment in a little bit more detail. So I really thank you for your patience on that. Yes, if the US dollar index is going strong, absolutely. Absolutely. The dollar, this market is dollar centric. Whatever you think about the dollar, and whatever you think of the US, whatever you think about Donald Trump, you have to set your personal views and opinions aside. And just the dollar index will always obviously reflect not only what is happening in the US, but it also reflects geopolitical events. But you have to also, if you're trading an Aussie dollar, of course, the local news that it's going to affect the Aussie, but that effect is going to happen in its appropriate session. It's going to be impacted at the time when it's a local currency. So, for example, anything to do with the Aussie, the reaction is going to be during the Asia session when that fundamental news is going to be released. I hope that explains that for you. But as I said, we will cover sentiment in more detail. And just before I wrap up very quickly, I know I do appreciate there was questions about the heat map. I promise you we will do that next time, looking at the numbers in more detail. Can I just quickly, I know you've probably seen this before because you signed up. These are the books at my own site and if you want to write about gold, I did a post a couple of days ago. Basically with gold, if the dollar goes down, gold tends to go up. If inflation is going up strongly, gold is used as a hedge. Maybe gold is finally coming out of the doldrums, particularly if inflation is, as they say it is going to go up. But the jury's still out because it is actually still trading in a range. But I'll be doing regular posts on gold, so you can catch up on my site on that. If you've got the quantum indicators, obviously you know the site, which is here, which is quantumtrading.com. If you don't, and it's the first time you've come across them, you can head over there. There are videos, support pages explaining the indicators in more detail. And I mentioned the program, the Forex program that we've put together. This is actually us. This is where we're broadcasting from at the moment with two very noisy dogs. I do apologize. And what we'll do next time, we'll give you a little look at the back end. But essentially, these are the foundation modules that we've put together for the program. And then here we have additional elements. We've got the VPA chart examples, how to use the indicators, then how you pull it all together. And as I said, it's a very resource-rich program. We have a private Facebook group as well, where David and I answer questions and offer support. And really, we think we've put together everything we think you need to know to be able to make a success in this market. And with the program, it does come with the full package of indicators. If you've already bought the package, the full package, you only paid the difference, which is about just under $500. If you haven't bought the indicators, depending on whether you go for Ninja or for MT4 MT5, it's either $13 or $1,500. Yeah, but it's all on the site. Thank you, Randall. And there's also the examples in the book as well. Is there anything you want to say, or is that it? That's pretty much it. Thank you so much for coming along today. It's lovely to have so many of you join us, and brilliant. And my last thing, sorry, I always forget to say this. If you do invest in the full package, when we develop new indicators, you automatically get them added. You don't have to pay any more money to us for any new indicator for the package. It only applies to the package customers. So in the last sort of 4 or 5 weeks, if you've got a full package, you can download the Camarilla, and on MT4 there's now a Euro index, and we're developing indicators all the time. So as I said, you will always get free upgrades and new indicators as we get. And the price of the full package, I will tell you. Thank you. Good question. Miss me. I will pass over to David. He's got them.
894 for the MT4.
It's 894 for the MT4 MT5, and the NinjaTrader is it's about 1190. And we are developing new platforms as well, but that's not going to be for someone. But if you've got any questions, just drop me an email. It's anna@annacooling.com. put down the questions, and I'll be more than happy to give you an answer. So brilliant. Thank you so much for coming. It's great to have you here. Thank you for the nice things that you said. And I will, yes, you will get a link separately, Ofa. I'll send you an email because the recording has to be processed, and we'll send you a link straight away. Thank you so much for coming. Have a great day. And don't forget, if you are trading British pound, you've got the services PMI at 9:30. Take care. Bye.